Let's look at the markets here today. We're at a critical level in the market. We went over this last week in last week's video. We're in a very vulnerable market right now. And let's go over exactly what we're talking about. I'm skinning this down a little bit. Last week, I went over that the S&P was at a critical level. This chart's a little easier to see. Let's take a look at it. So this is the S&P 500 large cap index. We had that big sell-off back in April, you can see. And then we had that 2-candle close above the 50 to really start moving the market upwards. But breaking the 200 here really got us going. And we've been in a hard move since May to the upside. The main stocks have been setting new highs, namely AI stocks. NVIDIA has been the leader. We have NVIDIA earnings after the close today, which is a very critical level because the market's on sort of a cliff right now. And dependent on what NVIDIA's earnings come out with, I believe they're expecting, $50 billion in revenues. So anything short of that or any short of expectations, we could see around a 7-8% move in the stock typically. And then you'll see the market really react to that. So it's kind of neat for the volatility for us because whatever they come out at, and it's going to really set the market tone because right now the market is breaking down on all indexes. S&P 500 broke down for the first time, closed below its 50 moving average since May the 1st. We talked about this last week, and I'll show you how to trade them intraday charts. These levels are very, very important. Some big trades over the last week, just trading off of these daily levels, off of the 100, 250 using our liquidity grab zones. It's been a really nice environment for trading. But let's take a look at some of these markets right now. This is the S&P 500 large in cap. You can see that we broke the 200 coming down to the 100 on the daily. As far as that goes, the futures already hit it. I'll show you yesterday. If we break a critical level today on the futures, then we're going to see a really potential big sell-off down to around 61.25, 61.25 to 61.50 in the S&P, which is a big drop-off because we are breaking down on all sectors. If I look at the Russell 2000 and you look what happened with the Russell 2000, we are breaking down. First time it broke the 50-day moving average again, we broke it around May 2nd, May 3rd, started subtrend. Really started subtrend when it broke us 200, retested it. We've been just in a bullish run. Valuations are really high in stocks right now, especially some of these AI stocks and so on future earnings. So these quantum computing stocks already got cut pretty much in half. They ran really hard on future expectations as AI and quantum computing, but now the valuations are so high, they're cutting these stocks pretty hard. So that's why NVIDIA's earnings tonight is so important. You know, do these valuations, are these high valuations worthy of these stock prices, or are we going to see a deep correction again? Because we've already moved down quite a bit. It's been a shorter market to short over the past couple of weeks. I showed you how to do that in the last couple of videos, and I'll show you again today. But if you look at the Russell 2000, we just broke the 50. Now we closed below the 100. That opens the door to the 200 lows we haven't seen since August when it broke out of this the cup and handle. The cup and handle broke out of June, July, into June, July. That was a breakout, really started to move in the Russell 2000. Small caps are doing the same thing. If you look at the small caps, they're breaking down. If I look at the small cap sector are just getting crushed right now. Small caps are all getting crushed. Once again, we haven't had a breakdown like this since June. Finally closed below the 50, and we're working our way down the 200. So a lot of these stocks are the indexes are moving down to the 200. So we're at a critical level tonight in tonight's earnings. Not only that, why is the market selling off? Well, you have the government shutting down. One, valuations are sky high. The market keeps hitting new highs. Number two, commercial real estate. They're talking about major foreclosures on commercial real estate. A lot of these loans are coming due that are financed at 2.5% to 3%, and now they got to refinance at 6.5%. And there's a lot of workplaces out there that work from home now. A lot of commercial retail are empty places and a lot of vacancies out there. We could have a major banking problem coming up, is what they're talking about, like 2008. So that's why I said this market's very, very, very on the edge of a cliff right now, especially with NVIDIA coming out with its earnings. That's good for volatility for futures traders, though, because we don't care if it goes up. We don't care if it goes down. You just got to make sure you're on the right side of the market, and you look at these big overall picture of the stocks. But look at the mid caps, too. If I go down to the mid caps are the same way. Every sector is breaking down. I mean, you got the mid cap breaking down. We close below the 50, the 100, moving down towards the 200. So tonight's earnings are really key. And why is the market also selling off? They're talking about not rolling interest rates over in the December meeting. Reducing interest rates in the December meeting. That's creating a major concern in the market. So, in other words, big number tonight for a bellwether like our AI NVIDIA, $50 billion in possible revenues. So anything short of expectations or future guidance, this market could be in some serious trouble. So we're at very critical levels. That creates opportunity for us in the futures market, because let's take a look at the futures market now. So what I talked about last week, I told you can put simple MAs up. MAs, we don't use them for trading, crossovers, any of that baloney, because they're lagging indicators. But it gives you a really good feel for what's going on in the market. We can see why these stocks are selling off. We can see why the bellwether NVIDIA is selling off. We can see why the bellwether Micron selling off. We can see why AMD selling off. Some of these big tech stocks, why Amazon's starting to sell off, why Google's starting to sell off, IBM, Microsoft. Those are the NVIDIA, Microsoft, Amazon, Google, IBM. Those are the top three infrastructure stocks of technology. So when you start seeing the big bellwether stocks selling off, then everything else really can crumble in its place. So the futures market is reflecting that. If you look at last week, we talked about this in the video. We broke out. I noticed this on the daily charts. We broke out in the May. But what I noticed is we were down here, and then we talked about this on the chart. We're on this critical level. I'm going to show you how to trade this intraday too. We're in this candle right here, and I said, listen, this is a critical level. We're at the 50-day moving average. We have not closed below the 50-day moving average since May 1st in the futures market. May 1st, where we were at November 7th. So very critical level. It would break it, close back above it, break it, close back above it. What it did, it came down, and we had a great buy signal. And I'm going to show you how to trade off these daily levels like this with our algorithm, because our trend filter turned up right when it broke through and came back up through. And it was a big trade to the upside, and it caught that big, nice little move to the upside. Consequently, our algorithm caught this big, nice move to the downside, because we finally closed below the 9 MA and the 20. And sure enough, this market just got crushed 1, 2, 3, 4 days in a row. What did I tell you last week? If we break through the 50, where are we going? We're probably going right down to the 100 on the daily chart. Where'd it go? It missed the 100 by a couple ticks, and we got a big spike rally yesterday. This could be like a little dead cat bounce before we see a big rotation again. Depending on NVIDIA's numbers tonight, we may see this, and we may just roll right back over to the 200, because this market's in a hard push to the downside. So how can we as futures traders take advantage of this with our algorithm? Well, I told you to look at two charts you can look at just by putting simple MAs up and understanding that there's no magical MA out there. No one can tell you there's a magical MA, because there's not. It's just simply a 950. You can use EMA or SMA. It's not a real big difference in either one. 9, 50, 20, 100, and 200. Those are the main MAs you look at. So when you look at them, you can see market structure. If market structure is breaking down, the close is right here. So if you're buying the futures market since 11/13, you're on the wrong side of the market. If you're trying to add to your stock portfolio on these dips, you're probably on the wrong side of the market, because you're pushing the overall push. The big money is pushing this down right now. The market is breaking down on all sectors: small caps, big caps, even the small caps, big caps, and the S&P 500. And you can really see it on the VIX. If I look at the VIX, let me show you this chart on the volatility index reading. The VIX will tell a story too. That's a volatility index. Look at the VIX. We're above the 200. I mean, just since May, we've been pretty much below these MAs all the way through. Look, she's trending hard up. So, you know, this market is very critical at these levels. So if NVIDIA comes out good, we bounce hard. We'll probably come up to the 50, and then we'll see resistance, and then we'll chop, and then it's going to decide if it wants to go down to this 200 level. But the projection is down at this level, so which I'll show you, here in a sec, where we need to be looking at this. So, but we bounced off of the 100 yesterday. So here was your selling opportunity in the futures market. How many days? It closed below on the 13th. And so 13th, it closed below. So last Thursday, Monday, Tuesday, and now Wednesday, Tuesday or Friday, Monday, Tuesday, now Wednesday, it's all been selling pressure. Now you can see this on the daily chart. We finally found support yesterday at 65.90. That's why we had that little rally yesterday. If we break this level of 65.90, it should take the air out of this market down to 64.15, right? 64.15. So really a critical level. You can see it on, if I look at the smaller charts, if I look at a 2-hour chart, I'm going to show you how to trade this intraday in a sec. If I look at the 2-hour chart, are we in an uptrend or downtrend? Since the 13, I like to look at the daily, and I look at the 2-hour chart to see if we're buying or selling futures. Should be selling futures since the 13th. The breakdown's right here. It closed a whole body candle close the first time inside of the 9 and the 20 MA. Look at all these days since the 13th. I mean, this 2-hour chart, 120-minute chart. Selling pressure comes up, tests the 50 almost to the tick. And this is what I told you guys to watch for. That 50 is a critical level for major institutional traders. They look at the 50-day moving average on the daily chart. They look at it on the weekly chart. They look at it on the quarterly chart. They look at it on the yearly chart. If you're a stock trader or if you're a futures trader, you should know where those levels are at, just so you can get a bias where your intraday trading is going to be. It's really, really key for you to understand where these levels are at. So just put those on the daily chart and the 2-hour chart, and you'll get a good feel for the market direction. Right now, you can see we're up against the MA right now. So we're up against that 20 MA currently right now. So the weakest part of the market to trade when you're trading futures is when you're below all these guys on the 2-hour chart. I mean, if your daily's in a downtrend, below it, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23 candles it's been below, all moving average. So November 16th, 17th, 18th, 19th, the last 3 days, it's been a shorter's market. There should be no longs in the market at all. If you look at your trade blotter, all southbound on the Greyhound. Now, how can we time it? We can time it because we know the daily broke down. We know the 2-hour chart broke down. Let's go to our charts. So I put these big blue lines up for a reason. I like to put up the daily levels and see where the 250 and the 100 is. And it's very important because if you skinny it down, you can see I told you last week that this market broke the 50 MA. We can have a sell-off down to the 100 MA. It's a critical level. But before it broke, it came down and bounced right off of it. You can see here, this is a great buy signal that we got. So we had a big sell-off right down to the 50 MA. Look how the daily chart stopped the intraday charts. And then we finally broke it. And I said, if we ever break this 50, we should slide right down to the 100. What did the market do? Slid all the way down. Look where it stopped. Right there in the 100. And then she got a nice buy signal. We had a big buy signal in the 25 buy zone, liquidity grab. This is a beautiful buy. There's your buy right there. And the market took off. Another beautiful buy because now you're moving back up to the 50. Another beautiful buy in the buy zone. And now we're right critically at below the 50, below 100. So let's say NVIDIA comes out bad, right? You're anticipating a break of this 65.92 level. Where should we go? All the way down to the 200. Look at that gap. So what do we want to do? We just want to take all 25 sell zones, all yellow triggers, short. Tomorrow, this is going to be a fun week of trading, guys. It's going to be a lot of volatility. Just take all shorts all the way down until we get down to that level. So if it comes out good and the market starts pushing, then we want to play off this 50. 50 daily. Break out. I want to take all buy signals when my yellow trigger candle or the 25 buy zone comes in. And consequently, if we get a green trend zone, right? So you want to stick on the side of the trend zone. In markets like this, you need to stick on the side of the trend zone. Would not go against it because it's very critical that we stick on the side of the trend zone. If the trend is moving up, we want to go with it. Trend's moving down, we want to go with it. Now, what you can do is you can trade off the bias on your daily chart and your 2-hour chart. So if you just want to take shorts until this daily chart turns up and the 2-hour chart turns up, if you just want to keep taking shorts, you're in the bias of the big push of what the smart money is trying to do. They're still trying to push it down. I mean, we've broken down on all indexes across the board. Even the banking sector is breaking down. So the market's very vulnerable right now, guys. Very vulnerable. So we could see a big drop again. Everybody's like, well, it's dropped so much. No, it hasn't. We're breaking down on all indexes that we haven't seen since May 1st. Okay. So just heads up on that. Now, if you're trading intraday, like I said, is you can go with the big push, the daily, and also of the 2-hour chart there. And you just want to stick on the side of those levels. So I put the critical levels up here for us today. You can see there's your 50, 100, 200. So those are critical levels for us. And then we'll see where we break out, on which side we break out. I did put the low volume nodes up. We'll put them right here. Here's a low volume node. Here's the other low volume node. So earlier, the low volume node, you like to see the yellow triggers come off those low volume nodes. We went over this video over and over again. You can put the bell curve over here, take your lowest volume, and that should be a bounce point. If you get a yellow trigger or a yellow trigger entry inside of our trend zone or inside of our trend zone 25 buy zone, that's a liquidity grab. It caught it again today for you London traders. 3 o'clock, nice move of 45 up to 52, almost 10 S&P points. Caught another big move here of 43 with trend all the way up to 69. Another big move on the S&P. So this one never got any movement. And then we're in between over here on market profile. So we'll watch to see if these critical levels hit today. If we look at the market, we're going to take this one out. Those are our balance levels. So the market's in a balanced market right now. Once we get imbalanced, which we will be imbalanced quite a bit this week, especially with the numbers coming out tonight with such a bellwether like NVIDIA, the top dog of AI and the infrastructure stocks. So we will see if they are going to sell. If they start selling off, this market's it's at a ledge right now. All indexes breaking down. So it's going to have to, we're going to have to shape up on these daily charts or this market could have a major sell-off. So we're going to find out here tonight after 4 p.m. Right as of right now, it's a short bias. I'd like to see us break down here again, 37.5 and that opens the door to some serious downside again. See if we can get down to that. I'd like to get us down to, I'd like to see the market flush out myself down to the 200-day moving average on the daily charts. I'd like to see us flush and just really take a nice hit in the market. And it's really, if you look at it, it's not even, it's a natural breath that the market's taking. I mean, if you take a look at this low and take a look at this high, this market could retreat and still be in a hard uptrend. It can come all the way down here. We can come down to the 5,800 levels. We're still in a hard uptrend, even if it broke the 200. If it's, if you look at the 62% retracement. So, for it to get down to 6,400, it's not out of the question. So we'll see if that happens. We'll stick on the side of the trend. Right now, our daily and 2-hour chart is pointing down. So we'd like to break the low of the LVA. If we can break the low and see if we can get some nice short setups this morning. I showed you how to trade the opening range. Okay, well, some of you guys are getting really good at the fair value gap. It worked again this week. Monday, Tuesday, and Wednesday. Monday and Tuesday, it worked again. I'm going to show you the 5-minute opening range. That shows you the bias of a push. It works really good with our trend filter and our entry levels. We'll see if we can get another one again today. I'll pop back on here at 9:30. All right, Gerald, shut that off. I'll be back in a few, guys. That is where we're at today. We're at a critical level on the market. We're in a neat little environment for volatility, and that is great for futures trading. Any questions, let me know. I'll be in the background and be back here at 9:30.